Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Hit that like button. Subscribe if you already haven't. Just want to wish you all a happy Thanksgiving. And I did do a video yesterday, because I said I'd go out. But I want to catch up on the videos today, so let's just keep going. And so let's go over the economic data yesterday, Wednesday, if you actually. I don't know. I'll put this somewhere here. So if you actually look at it here, 8:30, there was really nothing event. They have these like all these other like non-defense goods orders, but if you do look at it, let me see. Where was the durable goods orders? Yeah, the durable goods orders was up 2%. Consensus was 5%. That turned out to be not so good, but then around 10 o'clock, this is when they had a huge, like 9:45, the Chicago PMI. That's negative 40.2, way less than consensus. But at 10 o'clock, and you'll see this, PCE 3% expected, way above the 2%. But personal incomes were up 6%. I wish they break down that income because they lump it all together. And if you ask me, the only reason wages probably are positive is executive compensation. I think just if you go below the executive, there's probably no growth in wages. Personal spending and pending home sales, which was up 2% instead of negative 2%. Those are pretty strong numbers. And these are all oil, and you can see like the 15-year mortgage rate, 6.1%, it says 6.02. So if you look at it, there are, let's see, 30-year mortgage rate, that went down very minimally. And where's the big mortgage rate? Uh, 6.86, that went down a little, but it's not really, 6.86 instead of 6.9. But if you look at the markets here, like the S&P 500, even the Dow is the best example. You can tell it started out strong, but then when this data came in around 10, which is, if you look at it right around here, you can see the market started to digest it and started going down. And if you actually look at gold, too, just do the GLD because that's easy to remember. Same thing, around 10, gold was doing well, and then they saw with higher inflation but a strong economy, they probably said, well, the Fed probably can't cut rates, probably has to keep rates elevated. And yeah, so assets will sell off. So I personally think the bad economic data is coming. I'm just looking at this stuff, but yeah, so this data, it's Trump for you. So, but eventually this is going to come to a halt. Like I just want to go over, look at this. The Federal Reserve Bank of New York. Household debt rose modestly. Delinquency rates uh remain elevated. So, yeah, you can see delinquency rates are high. And that's not me. That is the Federal Reserve. But they say although household balances continue to rise in nominal, growth in income has outpaced debt. This is what it says. Now, what I would love to see is just what I said. Well, let's separate it because I bet you most of the people who own this debt, their incomes have not been rising. Meanwhile, George Gammon went over this. People that are like maybe teenagers because a lot of the restaurant and service jobs came. So due to, increases in minimum wage and the executive class because of asset price inflation. But I bet you most workers did not see an increase in they probably did not see an increase. And so that's one of the faulty things is they just lump all the wages and they take the average wage and they don't really and you look at it aggregate delinquency rates. Sorry. And if you look at this, aggregate delinquency rates edged up from the previous quarter. So they say credit card delinquencies improved, but as we can saw, look, I talked about this. Early delinquency for auto loans and mortgages have worsened. I said it's not just credit card debt that's a problem. There are a lot of problems and they will have to be dealt with. So anyway, that's the Federal Reserve, Bank of New York, just in case. And this is November 13th, so this article is fairly new. So just and then here's the other thing. US credit rejection rates are skyrocketing. The average rejection rate for credit cards this is a Twitter in the US hit 22.9%, the most in 11 years. So household debt and this is, the article I saw. Um, but mortgage debt surged 70 billion last quarter, reached all time. Credit card debt rose, but you saw from the other one. Student and auto loan debt all time high. So yeah, these are big problems. Credit card rejection rate, and that will show up in consumer spending because a lot of this is consumer spent on credit. So, and then the other thing is, I like this Twitter account, uh, but global markets investor, institutional investors have never been more bullish. Asset managers, levered funds, investors, most net long, that double the amount seen since 2021. And 2022 was a very bad year for investors. And you look at it, buy side positioning S&P 500. If you look at it, this is the high since 2010. The last time it was this high was right before 2020, and that was the COVID crisis. And then around 2021, towards the end, it was high. And of course, 2022 was a bad one. Uh, it was mainly the bond market, though. But if you look at it, generally not a sign. Like if this is 2015 and then there was the Trump trade and the market really went up until 2020. And then if you look at it, July 2020, before it really went up. So you don't really want to be up here. You want to be for a bull market, you want to here. And look at 2022, and that's before I should have more seen that. But I did say 2022 would not be a good year for investors, but this is not, yeah, this is just generally not a good sign. And then last thing, US bankruptcies in 2024 have officially surpassed 2020 during the 570 large US companies have declared bankruptcy year to date. And it's not over. There's December, there's the rest of November. We probably don't have so talk about that. And so yeah, we're seeing a lot of problems in the United States and but right now I think investor sentiment is strong and I think probably for the rest of this year, I don't think there'll be any problems till 2025 or 2026. I do think a rug pull's coming. Especially, yeah, the elites do not want, MAGA to become the norm for the next 10 to 15 years. And if there is no economic crisis, it will. So just putting on my conspiracy hat, they might last chance resort a rug pull. But anyway, that's all I had for you today. Hit that like button, subscribe if you already haven't, or give me a follow on Rumble. And maybe I'll put my Twitter account below so you can follow there. Or X account. It's on X. It's not Twitter. So anyway, I just want to also wrap up. None of this should be construed as financial advice. I'm not a financial advisor, so read disclaimer below. Have a good one.